Have you ever wished that there was an easy way for you to make money on a consistent basis without you having to lift a finger? Well, then guess what? There is, and that is by investing into dividend stocks. Today, I'm going to go through my top 5.5 dividend stocks in my personal portfolio that does have the potential to make you rich. I have added the last 0.5 because there is actually a bonus one in the end, and that one is actually my personal favorite dividend investment of all time. So don't tune out before you know what investment that is. Earning passive income is actually something that a lot of us are dreaming about and really want to achieve. I mean, who doesn't want to sit back on the beach in some exotic country while money is just rolling into your bank account? I guess we all want that. This is the point in the video where I would usually tell you that no income is truly passive and that there is always some work involved with passive income. However, today is your lucky day because when it comes to dividend stocks, well, then there is actually no work involved at all after you having bought the stock. That is, of course, if you buy the right stock the first time with long-term potential. And I might be able to help you with that in today's video. A dividend is essentially a reward that certain companies are providing their investors with in return for them having invested money into the company. A dividend is not something that companies are required to pay. However, there is actually companies out there paying dividends every single year. When a company makes a profit, well, then there are certain things that the company can do with this profit. And one of the things that they can do is reinvest all of the profit back into the company and use the profit for future growth. This could, for example, be done through something like research and development, which is something that Apple is doing a lot of, where they're trying to develop the new iMac, the new iPhone, the new iPad, and all the other things that they are producing. However, the company can also decide to do something else with their profit. They can also decide to distribute all of the profit out to their investors as a way of thanking them from their ongoing support, and that is known as dividend payments. Dividends are often paid 4 times per year, and that is every quarter. People always think that investing is all about finding the next big thing. However, that strategy often ends up with people losing a lot of money, especially right now where the markets can be extremely hard to navigate with everything that's going on. Here are dividend stocks the perfect solution for getting paid on a consistent basis while the market is not providing the investors with the largest capital gains. When it comes to dividend investing, well, then there is a ranking system that is very important to know of. And at the very top of this ranking system, well, then we have the stocks that not only have paid a dividend, but they have also increased their dividend payments for the last 50 years in a row. Just try to think about everything that has been going on for the last 50 years and then have a company that has been able to produce a profit year after year and pay their investors every single year for the last 50 years. That is completely insane to think about. The second rank in the dividend ranking system is what we know as dividend aristocrats. And these are basically companies that have increased their dividends for the last 25 years. That is the 2 official ranks we have when it comes to dividend investing. Below this, we have the companies that are also paying dividends consistently, but they might be less stable. And below them, we have the companies that are not paying any dividends at all. Here is a really important lesson for you guys. A lot of investors are being drawn into companies offering extremely high amounts of dividends, which is of course nice to receive. However, it is really important that the company you are investing into has the right potential for long-term growth, and that might not be the case here. Often extremely high dividends should be seen as a warning sign. It is indicating that the company is in a very bad financial situation. So you should really think before you invest into companies offering extremely high dividends. So with that being said, then let's start talking about my top 5.5 dividend stocks. The first company on my list is gonna be Johnson & Johnson. When I say that name, you are probably thinking about the company that made one of the first COVID-19 vaccines. However, they have actually made a lot more than that. They are actually also the powerhouse behind big worldwide brands like Listerine, Capel, Tylenol, and many others. Johnson & Johnson was founded all the way back in 1886 and they went on the stock market in 1944. So it is a company that has been around for ages. Johnson & Johnson is currently paying 2.5% in dividends, and that equals roughly $7 per share at the current price. At first this might not sound like a lot, but just imagine if you actually had 100 shares in this company, then you would actually receive $700 per year in purely passive income without doing any work at all. Plus you would have the chance for this stock to increase in value as well. They have increased their dividends for the last 50 years. So investing might be a good idea since they only will keep on increasing their dividends every single year. It is also a very solid company that brings in a good amount of profit every single year, and they don't mind sharing this profit with their investors. Johnson & Johnson is actually the market leader within the Band-Aid market. They are also major players within the vaccine market, skin health and self-care. The second company on my list is going to be JP Morgan. JP Morgan is basically the biggest bank in the US, and they're great at giving their investors high dividends. They are giving roughly 3.5% in dividends, which at the current price equals roughly $3 per share. Right now it might be really attractive to buy JP Morgan because the banking industry is actually one of the only industries that can benefit from an increase in the interest rate and in the inflation, because they are basically able to charge more for their loans. Since the financial crisis in 2008, this company has done everything that they possibly can in order to reduce their costs. So it is a very strong company at the moment. The reason why I have JP Morgan in my dividend portfolio is basically because I do believe it is one of the best financial institutions there is. And it is most likely also the most influential one in the world. The third company on my list is gonna be ExxonMobil Corp. This is a company selling oil and gas, and even though this industry might be having a hard time with all of the new companies coming up that are having these environmental friendly solutions, then this is a company that is not going anywhere in the future. It is going to take a long time before we are able to produce enough energy in a very sustainable way for companies like this one to not be useful anymore. And at that time, it is very likely that this company has a very energy efficient way of doing things as well. So I wouldn't think too much about that. Investing into this industry is actually a really good way of getting a more diversified and well-rounded portfolio. This year, this company is up by 32%, while all of the tech stocks are down by 32%. So it does give some security, and it can be used as a good hedge. I'm certainly very happy that I have this company right now. They are paying more than 4% in dividends, and at the current price that equals more than $3 per share. The dividend yield actually used to be much higher, but because of the stock have increased by 32% this year, well then have the dividend yield decreased. So this dividend yield might go up again in the future. Overall, ExxonMobil Corp is a great company that is providing investors with really high amounts of dividends. And that is exactly why I have it in my portfolio. The fourth one on my list is a bit different from the other stocks I've mentioned. However, this one is really exciting as well. It is a REIT called Royalty Income Corp. This company, or REIT, is basically paying around 3.4% in annual dividends. And at the current price of the share, well then that equals $2 per share. A REIT stands for Real Estate Investment Trust, and it is a great way for someone like me with no experience or no expertise at all to be able to compete with the professional real estate investors. REITs are essentially companies that own a lot of real estate, and they are basically making their money from people renting their real estate assets. The best part is that the money the REIT receives must be split up and shared with investors. Because REITs, they are actually by law obligated to pay 90% of their total taxable income to their investors. This essentially means that you can actually benefit from rental income without actually owning any physical real estate. Royalty Income Corp is one of my all-time favorite REITs. They have more than 11,000 real estate assets, and they have tenants living there like Walmart, Amazon, Tesco's, Dollar General and many other. These tenants are very reliable and very predictable when it comes to the income that they are earning. And that is exactly what you want to look for as a REIT investor. In the Great Recession in 2008, their tenants only dropped by 4%, and they kept on increasing their dividends even though we were in a recession. And they have paid consistent dividends for the last 52 years. The fifth company on my list is a company that probably doesn't need much introduction. It is PepsiCo. PepsiCo is a really great and well-diversified company. It is a company that owns a lot of brands, and you probably either know of these brands or are using these brands. They actually own so many brands within the snack industry that it is becoming hard to keep track of. A few of the brands that they actually own is Lay's, Gatorade, Tropicana and Mountain Dew. They own so many others as well. Not only is this a really great company within its industry, but it is also paying high dividends, which makes the company even more attractive. They pay a dividend of 4%, which at the current price equals $4 per share. And now for the bonus one, the last one on my list, and also my all-time favorite dividend investment. If you, just like me, don't like to spend all your time looking at individual stocks, well then this might just become your favorite dividend investment as well. The Vanguard High Yield ETF. This is technically not a stock but a fund, and this fund combines 443 companies with above average dividend yield, which you can invest into by simply buying this fund. This fund does include JP Morgan, PepsiCo and Johnson & Johnson that I talked about before, and many others. So instead of going around and buying all of these stocks individually, well then you can simply buy this index fund and you can reap all the benefits there is of having a well-diversified dividend portfolio. Investing in funds is basically making the whole process of investing much easier and cheaper for the average person who doesn't have the funds to go out there and invest in many different companies. This fund has a dividend payout of 3.5%, which is not the highest, but it is the easiest and the most diversified investment that you can make. This fund has been around for more than 45 years, and it is one of the cheapest funds you can buy. It has an annual expense ratio of 0.6%, which is something that is extremely important. That was basically all I had in today's video. So thank you for watching the video. If you like the video, then please press the like button below the video and subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.